but we haven't made a video in a while, and I wanted to kind of take a look at my portfolio and chat about it. So, today is November 7th, it's a Friday. My portfolio is actually doing like really well, but I think everybody's probably is. The SPY, I mean, it was almost at like 700, which is pretty ridiculous. But it hit like 690 or so. We had this, it basically has been going pretty much straight up with minor pullbacks since this like April 2025 period. We're up like 30% since then, even more, depending on where you want to put the dot. Kind of crazy. So I'm wondering, we should probably expect a pullback soon. But anyway, I want to go into my stuff. Okay, wait. I cannot believe gold hit almost 4,400. Actually, probably just like touched it, and now it's hovering at around 4,000. That's crazy. Like it's making gold back here almost a year ago at almost 3,000 seemed like a joke. I'm kind of beating myself up a little bit because I was trading gold and buying stuff. I don't even know, like 2021 to like 2023 time period. And I was like, I don't know, I just didn't want to be involved in it anymore. And now I'm kind of beating myself up because like things like AEM, like I own this at like under 40 bucks, and it just exploded like 160. Like that's great. That was the move I was hoping for, but I was holding on to it for like 3 or 4 years. And I was just like, alright, let me get out of this. Same thing, CCJ, I made good money on this. This is uranium. I had it at 17 bucks a long time ago. Like, yeah, we're talking, was that long ago? Wow, time really flies. But yeah, you can go back and watch the videos if you really care. But anyway, at about 17 bucks, I think I made like a 70% trade on that. But now it's making that look dumb because I could have made a couple hundred. But that's something I've been kind of beating myself up a little bit lately. But I can't be mad because I made some money. Silver, yeah, it was almost at 55 bucks, and hovering at about like 50 now, just below. I wonder what's Apple doing. Let's see what else we got on the watch list. Anyway, so I have AMAT in the portfolio, AMAT. I just think it's a pretty good stock. Or it's a pretty good company. I don't want to go into deep dive all these. I think we have like other videos about that, but I kind of just want to talk about maybe the price action the last like couple months. But I'm at 170 bucks, just around here. It seems a little expensive now. I went up like 35%, but they have earnings soon. Actually, next Wednesday or Tuesday. No, Wednesday, Thursday. So we'll see how they do. I haven't really been reading too much of the earnings calls though, so read the earnings reports or listen to the earnings call. I just don't really have the time. But I mean, maybe I should make the time. I'm not making an excuse. I'm just stating a fact, you know. Google has been absolutely ripping up. So I had Google like. This was dumb, but I could probably throw. Actually, I'm actually curious. Let me see if I can put these trades on. 1 second, show trades. Yeah, so I had Google. Yeah, here. I didn't really have too many shares. I sold here, then it went up, and then I'm buying up here. But I've been holding on since. But I ran at $168, and we're up. Actually, that's a lot of money. I'm up. Wow. Okay. Google kind of exploded up. The fact that they're paying a dividend, they have like no debt, they make it a crazy cash flow, and they're in like good spaces. I like the stock a lot. I think it's very expensive right now, but I think back here I didn't think it was that expensive. Maybe I should have bought some more, but it wasn't like in my opinion, a super discount. But now it's really overpriced. This was crazy. So those of you know, I'm still bag holding Intel. I'm at 40 bucks. But for the first time in like, I don't even know. Actually, that's too far. Okay, click buttons. In the first time since April of 2024, I'm actually positive again. It's tough out here. But yeah, this move was massive. I think Nvidia bought some of Intel. I don't know. There's a whole bunch of stuff going around, but when I bought Intel like years ago at like 40 bucks, 50 bucks, my goal was like, or my thought process was like the end of like this decade, so we still have a few years, and I mean, it's been a roller coaster, and it was in the negatives for a while, but now we're back up. I was debating, or I'm still debating, maybe selling a little bit just to offset some of the portfolio, 'cause it's still, I think, like 10% of the portfolio, and it just trades like a penny stock, and they don't have a dividend anymore. I don't know, it's something I gotta think about a little more, but I'm expecting this to pull back a little bit. Like even probably to $30, definitely maybe 35. Like it's just, you can't go up like 100% in like 2 months and then not pull back, you know? So we'll see what happens, but yeah, still bag holding that. J&J's in the portfolio, it actually kind of ripped up pretty nice, but just I bought it at a decent price, I think, in my opinion. And it's paying a decent dividend, so just holding it. Lockheed's another one I kind of bought. I'm at 455 basically, so like here, yeah, I bought it like this like trend line area. I was like, it dipped below, and I was like, it'll probably keep going, or it'll probably hang tight here. And if it doesn't, well, then I just own the stock now. But yeah, I think it's a pretty solid company. I bought, actually, I had it like years ago, but definitely before this move, I think like down here. And yeah, so it's like I should just hold on to these stocks, like looking back in hindsight, but just things change. But I have MRK, I thought I bought this at like a good value, then it dropped. I'm in at 105, so I'm down like almost 20% still. Nothing significant here. Pan American Silver, I had to buy this. Actually, I'm still holding this. I was buying around here. I'm in at like $21, and it ripped up, obviously because of silver. Now let's see here. It's at this like pullback period. Yeah, sorry, it's at this like resistance spot, which makes sense. Yeah, we're at like all-time highs like ever, so definitely should expect the pullback here. But man, with gold at 4K, silver almost at $50, this company should be making a lot of money, and I think this is they're well positioned. I mean, don't take my word for that, or don't even, like, I haven't done that much research about this company in a while. Like, my research of this company was back in like 2020 to like 2023. It's like down here, and I did own the company again. But anyway, I think we're going to see a pullback probably like to $30, let's say. I don't know, but I'm just going to bag hold it a little bit and see where it takes us, because, man, the gold's ripping. Yeah, I got Pepsi. Let's go back to yearly time frame. Still got Pepsi. This dropped hard. I think my dividend's at like almost 4% now that I bought it at, so pretty good. I thought it was not that risky to buy it, so that's why I did that. It's pretty, again, staple. So this is Ruger RGR. This is a disaster. I don't know, man. I think I bought it. Was it $54? Like, I think probably around here. No. Yeah. This 2023 right here, and it just tanked. And then now we got this like 40% move up. I'm like, wow, nice. It's finally doing something. And then, yep, now it does something even more. Another 30% down right on earnings. That's tough out there. That is tough. But yeah, it's not a huge percentage of the portfolio, but it's like, it's enough, Not too happy. I still have SCHD. I'm surprised it isn't like doing too much. But I mean, this is just a dividend ETF play, so I don't really care if it does a lot, Snap-on, dude, this company is like, I love this stock and the company itself. Like, today, again, yesterday, they announced another 14% dividend increase, so $2.14, now $2.44, that's crazy. That puts my yield at like 3.4%. I think the current yield would be like, or the forward yield would be 2.8. But yeah, I got a good amount of shares. It's the biggest percentage of my portfolio, and it's just they don't have a lot of debt. I think they're in a pretty good space moving forward. They have generated a lot of free cash flow. I've been kind of talking about this company for a while and buying it for a while. Going back to like a 5-year time frame, I started buying this company like down here, 2022 or 2021. just I don't know. That might be a little expensive though now, but it depends. Like, how much does somebody value the low debt, free cash flow generation, and the ability to pay that dividend? It's just you gotta put a little bit higher price maybe on it than. But anyway, I don't really want. I want to buy more, but I don't want to really buy it at like this price. Yeah, just because it's such a big percentage. I think this is like 20-something% of the my portfolio, so I'm a little bit, I guess, risky in that sense. But I don't know. It just is a good company, and again, from my standards, my unexpertise or my lack of expertise in this, but from my point of view, the company just seems solid, and the stock's been pretty performing. It's not ripping up hundreds of percent, but it's consistently, pretty steadily performing. It kind of looks like, from a technical perspective, we're getting this like bowl pattern. Maybe let that cup and handle. Maybe it goes up the back to retest this all-time high of like 370, and then maybe it'll pull back again, then shoot up, or it could just tank it. Who knows? But I'm just saying it kind of looks like this like cuppy pattern. If people think that has a high probability of performing, I never really liked those too much. Simon Property's kind of nice. Dividend increased at 220. I haven't really been monitoring this at all or anything, but I just have it in the portfolio as a REIT. Smith & Wesson, yeah, it's gonna tank, obviously, because the earnings on Ruger. I don't know. I definitely overexpose myself in this sector. But the companies just don't really have a lot of debt, and they pay a dividend, and that's what enticed me. But yeah, there's definitely a lot of negative to this. I'm down a lot. I'm in at $15, so yeah, I'm not even like on the map. This thing's gotta go up like 100%. I'm down a lot. UPS, I'm in at 115. I think I started like 130 and I chipped away at it, but it's just been continually going down. Now we finally got this like break off of earnings where it's up a little bit. This is a tough one because like this company right now has a pretty high dividend. This gives me 3M vibes. So 3M had a really high dividend. They like fell. They cut their dividend like here, and then they shot back up, and like I sold like around here, obviously right before it shoots up. And yeah, I was in at 140 like when I sold, so I'd still be up in money, even though the dividend got cut. I mean, just, I don't know, but UPS is giving me those vibes, and I bought a little bit just to get my feet wet. It's just a high dividend on like a well-known company. It entices me to buy. Obviously, there's a lot of other factors to it, but like Pepsi, I'm just trying to think. Like Pepsi was another example where it's like, okay, it's pretty solid company. I don't love the debt, but they pay a dividend. They can earn money. They're a well-known company. They seem to be trading at a value, so it's kind of like, do we hop in just a little bit, So again, throw some money at it, and like that's the maybe not the best assessment of the stock, but it's kind of where my head's at. Like there aren't always perfect companies. Like Google, my head is like almost a perfect like stock. So I should say a perfect like stock. It's just that dividend isn't where I want it to be starting, but there's again so many other factors in it. That's why in my head I think Snap-on for my point of view in my trading or like investing like thesis or the way I want to do things, like this is like a perfect stock, and that's why I continually buy it. If Google's dividend was like 2% or even like 1.5%, probably the bare minimum, that'd be like, okay, that's a perfect stock. And again, I shouldn't be nitpicking the dividend, but at the same time, the starting yield does matter in a sense, because I don't know what this company's dividend's going to be like in 5 years from now. They could keep increasing it, they might not, but at least the starting yield, again, there's so many factors that could cut the dividend, but UPS UPS starting dividend, I think it's like 6%. Actually, what is? Let me see something. I got a calculator up. You can't see it though. I'm sorry. 1.64 times 4 divided by, let's say 95. The market's about to close. It's 6.9%. The market, to me, that is, they're baking in a dividend cut already. The question is, do they cut it? If not, you're getting a really good value, and maybe, you know, they weather the storm and they come out of it. And, like, Exxon was like, is my, like, I gotta stop saying like, but Exxon is my, like, baby. Because down here, this was like COVID, and they're like, oh, every company's gonna cut all the oil and gas companies are gonna cut the dividend, they're gonna go out of business, blah, 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 blah. So I got these notes here. And then Exxon held the dividend, they weathered the storm, and they got out, and now they're super high in price. But not even that. I was able to, right now my dividend yield in Exxon is 10%. Actually, because they increased their dividend, I think today or yesterday, it's 10.41%. See this, they increased. That's crazy. And the risk was that this good company, that the market was baking dividend cuts and these expectations into a company that maybe were true momentarily, but if the company can survive certain situations, it makes the stock really investable. From, again, my perspective, like, this is like the best stock I have, I think, right now. And it's because I took a risk against what people were saying. And I'm not saying that's always the case, because like with 3M, people were saying, oh, they're gonna cut the dividend, blah, 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 and this thing dropped, 50-something%, and I was a part of that, and then they cut the dividend. Intel is a perfect story of, the same thing. And like Intel, they cut the dividend and suspended it, and I'm like in the gutter for a while, and I got like, it's just like dead money, you know? So not everything is like sunshine and rainbows, but at the same time, depending on like someone's investing time horizon, like me, maybe you get like one or two bad companies, but then you get one really good one. And does that really good one offset the other bad ones? In some situations, probably. And for my situation, I'd say yes, because even at Intel all the way in the water, and even 3M in the water, like Exxon's gain with that dividend that I have now at this current moment in time, like, offset all those bad things. And I lost a good amount in Intel too. Like, I'm not including this big jump up here. If it was still down here, I would still be pretty good. So just something I'm always thinking about is, where's the next Exxon? Or where's the market beating this stock up to the max? And where can I take a little bit of maybe a risk to buy something cheap, get a very high dividend, and then maybe same thing. Sorry, I'm thinking of all these examples. Hasbro was one too. Looking at weekly candles, Hasbro. I don't even know where I bought this, but I bought it like under $50, and then I think I sold it like 60, 70. Actually, let me throw in the trades. What am I doing? I forgot. Yeah, it's $47, and then we sold it 65. Again, it was like, I had 2 shares, but that's actually nothing. I wish I bought more. What was I doing? This was risky though. But anyway, it's where's the market? Where's the market beating up these stocks? Where can we find opportunities? And I'm thinking, is UPS one? Like, if I could get in at like a 7%, even 6% yield, like, that's massive. It's risky. Anyway, I digress. VMY, that doesn't do much. Verizon's kind of been disappointing. It's just trading sideways. I'm in at $50. I'm kind of just hoping to like break even. They have so much debt. I don't love this company at all. Let me see. Actually, I'm thinking about it. I just realized, can you see my cursor? Oh no, you can't see my cursor. Now you can, okay. cursor off. I'm sorry. Anyway, the Verizon. Yeah, I'm in at like 5.3% yield, but I don't. They just got dead, and that adds risk, and I don't like that. So this is a company I'm probably looking to exit despite the somewhat good yield. I'd rather just buy something else. Also, hold on, I'm doing just quick math. 1.3 times 4 divided by, let's say, 117. Exxon's starting yield is 3.5. Nice. Waste management's another one I'm kind of looking at. Yeah, look at this. They're at this like grind, look at this grind line. They're just dipping below. I think they hold at like $200 maybe. That might be appetizing. Their yield's not that big, but it's just a very, I'd say, relatively safe company compared to other ones. I was looking at WD-40, but I don't know about that one. Yeah, so some other things I'm looking at. Amgen, I've been lining this up for a while. Disney, I don't know. Granger, yeah, this thing is in some interesting territory where you're at this grind line too, but look at that, just that's way too much. Gotta see it take a pullback. Of course, this company shoots up. Qualcomm. I had Qualcomm for like a whole year. I didn't have a lot of shares, though. I just threw some money in it, but more than a year, and I just sold here, and then boom, shoots up. Yep. I mean, it's kind of back where it was, but anyway, it's just funny. If I buy something, it just drops. If I sell something, it's just how it is, you know. Let's see. I'm trying to think if there's anything else what's on my list. Stack. Or dailies. Target's interesting. Target's getting destroyed, but I really don't like that space. But I can't ignore the fact of how much it went down in price. JP Morgan. Caterpillar really bothers me. I wish I bought this at $100. Or I wish I wasn't greedy when it was almost $100. I'm not gonna let myself live this down. Yeah, so I think this is like during COVID or whatever. So this is 2018. This is April 2020. I was gonna buy it at like $100, like right here. Like, pretty sure this was the month, and I'm like, I'll buy it at $100. And it got there for like a second. I don't even know if I was watching the thing that day, the stock market, but it like kissed it and then went above, and I'm like, I'll wait till it goes back. And then it never did. So that's a lesson learned. I thought it was a pretty good company. I'm not saying I would have held on this long, but I'm just saying that there was a good opportunity to probably buy something that I kind of wanted. And because it didn't hit this exact price that I wanted, nitpicking the price, I missed out on an opportunity. So now if I like a stock, I give myself like a huge, not a huge, but a good range where it's like, alright, I'm gonna chip away at it, you know? Because I learned lessons about myself over time about how I like want to buy things and invest in the type of risk tolerances that I'm willing to take. But yeah. Anyway, it's just a game. You gotta understand yourself. Wow, AMD's ripping up. Jeez. Actually, what's Nvidia doing? Doing Nvidia things, the most expensive company in the universe. That's crazy. Like, this is COVID. Like, since like COVID, it's up like 1,000%. That's insane. Anyway, I'm gonna wrap this video up. Hopefully you enjoyed the conversation. Let me know if you enjoy these videos. I know I've been slacking on them, but I'm still around. I'm still looking at stocks and stuff, just not as intensely. I'm just focusing my time on other things. But anyway, hopefully you have a good rest of your night or day, and I'll talk to you soon.